Listen, sorry to interrupt, but it really is important for us. If you can just hit the like and subscribe button, that allows us to bring you the very best financial intelligence and the best guests on the planet. Anyway, appreciate it. Like and subscribe.
Hey guys, welcome to this week's REKT Vision. This week, the show is not live. We're actually recording this on Thursday afternoon, November the 14th, Eastern time. It's actually evening my time, and it's probably tomorrow and Jamie's time. But that's because Mando's off, and we have Jamie all the way from Australia. Jamie Coutts, as you guys are probably familiar with, is the chief crypto analyst at Real Vision. Jamie, welcome to REKT Vision.
Hey, great to be on, Obi. From the future too, might I add.
Yeah, exactly. You'll have all the right information that I'll need to make my decision tomorrow, I guess.
Yeah. No, thanks very much for having me on. I'm a big fan of the show.
Yeah, no, thanks for being here. How have you found it in the last week?
Yeah, look, last week's been okay. The week before, that was the week, right? I think I'm feeling pretty tired. There's a lot to write about at the moment, and it's really like picking what to write about and serve that up for the pro crypto community. But last week was just, it was a tear. Yeah. It was a realization of like so many different things all at once. But it's markets are settling in now a little bit. You've seen pullbacks, and it's at this stage where you start to see like who are going to be like the true performers going forward, because everything exploded. Things are catching up, and then there'll be profit taking, and then from there, obviously, okay, where's the leadership coming from? So yeah, it's a great time to be in crypto markets. We've all been suffering for 8 months.
I like that point that you made on this is kind of now where the market leaders get discovered, kind of thing. Because I think when you have a big move, either a big move down or a big move higher, it's always led by something. And in big moves down, you also always have like, I don't know, a handful of things that the first to rally back or never really moved lower. And that's kind of like when the market shows its hand. I think when you have stable price action, it's difficult to really judge the technicals to the naked eye unless you're, an expert chartist. But when you have these big like parallel moves across the whole space, and then you see like, oh wow, this is the thing that was up like 3 times more than everything else, or this is the thing that didn't move lower when everything else did. That's when, in my opinion, hands get shown, and you kind of get a sense of like, okay, this is what someone out there is buying for whatever reason it is, whether they're smart money, whether there's a big short base on it, I don't know. But and that I feel like it's something that's held true not only in crypto, but back when I used to trade, credit, it was the same thing. It was like, it'd always be like a bond I was short trying to take low and the market puked. And then you get a phone call and it's like, I see you've quoted these bonds lower. Can you offer some? It's like,
There's always a way. Yeah, like the counter, the relative performance is always something that I've been most interested in, just trying to rank all of these assets to see where the pockets of relative strength are. And it's hard in crypto because it's an unstructured market, or relatively unstructured. It's getting a lot better. And I showed you earlier like the sector classifications that are now coming through. So the ability to sit down like effectively in front of like a Bloomberg S-type screen in the future and be able to say, okay, this sector is outperforming this sector and this sector is underperforming. That's all coming. But it's at the moment, people are just like glued to coinmarketcap.com or CoinGecko, and they just see like 200 assets and they don't know what's what. So it's difficult.
Yeah, definitely.
Hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now.
Well, I think we're going to have a good show today. We have a few interesting topics to talk about. Obviously, we're not at a loss for things to mention given the price action in the last week. Before we get started, just want to quickly mention, as you guys know, we are organizing a Real Vision in-person event in Miami. It's going to be the crypto gathering that's going to take place at the end of January. If you want to find out more information and secure tickets, head over to realvision.com/CG 2025. That's realvision.com/CG 2025. You can get discounted tickets right now. That offer will end on November the 28th. I will definitely be there, so I hope to see everyone there. Are you planning on attending, Jamie? It's a long way for you, I guess, but
there's a chance. There's
always a chance.
The next couple of days,
yeah. Always a chance. All right, so look, I thought we'd kick it off with just like a general market chat. We had a great week in the first week post-Trump, but the last week is really where the meat of the price action has come. As things stand, Bitcoin is up about 17 to 18% in the space of a week. That's a move from about 76K to almost 90K. I think we hit an all-time high of almost 93K at some point last week. It feels like, and I've been doing the show with Mando for a good few months now. It feels like this was the move we've all been waiting for post the Trump win. Finally, Bitcoin through all-time highs to 88, 90K. And I think many people out there had potential like Bitcoin tops for this cycle at these levels, or potentially even maybe like 90K or 100K. And we're kind of there or thereabouts. So I'm just curious, like, what's your take on the move in the last week? Did that happen faster than you expected it to? And what was your expectation for like the Bitcoin top price for this cycle? And has that changed given the price action we've seen in the last week?
Yeah, it definitely hasn't changed. And I think the price move that we've seen is 100% to be expected. I mean, like, no one has a crystal ball, but when you get a resistance level which extends 4 years back, essentially, I mean, so we had obviously broken the high back in Q1, but it was pretty much a failed break. And then we traded lower. So 4 years of essentially touching a resistance level and failing each and every time, always in TA and in markets, once it breaks with really high velocity. And that's exactly what we saw. We saw, all the built up shorts and all the derivatives positions around that top, because you have a built-in expectation and market belief that it won't break. All have to be unwound very, very quickly. That just adds fuel to the upside move, and you get this really strong high velocity break. So no, it's pretty much in line. The thing that I find interesting, and I put this on Twitter yesterday, which is always tricky because everyone's long. Real Vision subscribers have been on the right side of this trade, from very, very early on. Everyone's super conscious of like when the top is. Everyone's got the trigger finger, looking to sell, take profits. So I probably did the worst possible thing and just highlighted a few concerns that were coming to my attention. But it doesn't change the long-term outlook. And those things are just, short-term macro liquidity indicators. Because some of the framework that I have catches things on a more short to medium term, like the momentum of these things. And DXY above 106 is not generally good for risk assets. Yields rising is not good for risk assets generally. The Treasury Volatility Index above 100, it was as high as 130 recently, is generally not good because that's a collateral of the entire financial system. And so I just pointed out that like these things are still like they're not coming down, or they're not moving the way that we would like them to. And we started to see perps funding rates get as high as like 40%, which is not as high as they can go. And it's only like 1 or 2 days, and these things can sustain themselves for weeks, usually, like we did in Q1. But it was just like more of a warning. It's like, okay, Bitcoin's at 90,000. It was, as you said, like 70,000 a week and a half ago, or even like low 60,000 a week and a half ago. Don't get over your skis here. And, if you've got leverage, this might be the time to take it off. But in terms of long term, like I read some reports for Real Vision Pro Crypto, which went pretty deep into this question of like, when does the cycle likely top and where could Bitcoin get to? Which, is always a tricky thing to analyze, because for 100% that you're going to be wrong on every level. It's just my aim with these reports and this analysis to try and just get directionally right and within a fairly close time frame. So that report looked at using just global liquidity and the relationship that it has had with the Bitcoin price may not continue in the future as high. That relationship may not stay as high because markets are non-stationary, blah, 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 blah. But we looked at the sort of relationship between tops in global M2 and Bitcoin, and it looks like, Q3, potentially, if it's just a normal cycle. So global M2 would probably top early in 2026, and Bitcoin always tends to top before because it detects the rate of change, the slowdown in global M2, because that's a forewarning of what's to come, which is tightening. And based on a couple of different sort of probabilities, I saw Bitcoin potentially getting to about 189,000. So that's kind of my long-term cycle view. And of course, this can extend, it can contract. We may get something like in 2021 where it gets really heated and there's extreme positioning in the futures market. Funding blows out and stays blown out for a very, very long time. Positioning's all one way, catalyst event, and it just knocks the wind out of Bitcoin sales. Who knows? But I think this time it's actually going to be the opposite. We probably get an extension of the cycle. It's just, we can get into that, but that's essentially the long-term view. And out of that, I also made some forecasts around other sectors and the total market cap.
It's been interesting to watch the funding aspect of this cycle because, as you mentioned, in 2021, you'd have periods of weeks with funding like, 80, 90%, 100% in some cases. And, obviously on some altcoins, it would even be through that. And we did sort of have that at the beginning of this year in Q1 this year. And the end of last year, we had, 60, 70%, maybe like 50, 60% funding on like Bitcoin, ETH, and Sol for a long time. It seems to have stabilized or gone a lot lower. And for a while, all throughout summer, obviously, it was flat or maybe even negative in some cases. But I think two things that have changed in the funding angle now compared to 21, which makes me look at it less because I feel like I'm not getting all the information, is number one, the existence of ETFs. So you have all these TradFi guys putting on the basis trades where they're taking the other side, shorting perps basically and owning ETFs, and the rise of Athena as well, which just didn't exist last year, which also captures the arb between or captures the funding rates. So now when I look at funding rates, I'm like, sometimes it looks like funding rates are low, and you naturally assume, oh, that means like OI is probably quite low and there's not much risk in the system. But then you go look at OI and it's like a ton of OI out there, and you realize there's this massive gross risk, but like low funding, which in itself is a bit concerning to me sometimes. But it's hard because I feel like we don't get the full picture, because we don't see, you don't see who like the people who are taking risk now on perps. It's like you don't know if it's delta neutral or directional risk. It's tough to really judge, I think.
It's a lot harder. Like that one measure of funding, I don't think has as much signal. Or probably what I should say is going forward won't have as much signal. It actually was perfect for the Q1 top. Like it called it wonderfully well. I usually put a Z-score on it just to look at, how extreme is the move relative to its history. And so anyway, it worked really well in Q1. And it's not there at the moment, but like you've got more products, you've got all the micro strategy derivative, the ETFs and the 2x leverage and all this stuff. And there's probably going to be a whole private market of leverage that's going to grow up this cycle, which is like super concerning always. So it's going to be harder to detect. Maybe the perps market loses a little bit of its signal because there's just other ways to play Bitcoin this cycle. And you've got, big R players who are now shorting the perps. So it's a more sophisticated player. So it's trickier.
I think it's almost like even more concerning now if funding goes a lot higher, because it means, all these guys who are taking the other side and putting on that basis trade, it kind of means their mark to market is getting incrementally worse. And especially if you're like a big TradFi shop doing it, like you can't just like run that position forever. Like if your mark to market gets worse and therefore your P&L gets worse on a daily or monthly basis, eventually someone comes to you and taps you on the shoulder and you have to like, unwind it. And again, like back when I was at Barclays, it was the same thing. People would put on the ARB on like the crossover CDS index versus single names. And there's one point where the ARB just got to like this crazy level because of like various technicals, and all these guys had to like stop out of the trade on literally a delta neutral trade. They all stopped out and just caused like, because all the gross risk was massive. So just caused all these like crazy things to happen in the market. So like, I'm actually like even more concerned now on funding levels, because if it starts to go like north of 50%, you're just thinking like, why aren't these guys taking the other side of the trade anymore? Are they out of their risk appetite for it? And that's the kind of thing which is like, it's a little bit a little bit dicey, I think.
Yeah, that's a really interesting perspective, because I mean, I was just an equity guy, right? So I hardly dabbled in the derivatives market. I always looked at envy over the derivatives guys and also the fixed income guys, because they were generally the smarter guys in the room. So yeah, it's a bit of a worry if it stays sustained, for sure. Like it was just a couple of days spike, and then it has come back, but probably hasn't come back as much as you would hope it would. But once you start seeing it like day after day and it stretches into weeks like that, I think it was like February of 2021 all the way through to May, the elevated funding rates. It was the end of the market. It was the end of the bull run for Bitcoin, really. That was the top, even though it did make a new all-time high. It just knocked the wind out of the entire cycle. So yeah, it is a big concern. Just got to hope the ETF spot buys are just like overwhelming the derivatives players, which actually there's an argument to say that they are at this point. I mean, the demand is strong for these ETFs, and it's overshadowing some of that expansion in OI.
Yeah, absolutely. It seems so. I mean, it's the perfect environment, really, because 2021, if you're not crypto native and you're trying to put on the crypto trade, it was kind of like sign up for Coinbase, and then you don't really, have to go through all the KYC if you're not in a jurisdiction where they offer it easily, and then you just have a completely different app. Whereas now you can just go out and then buy the ETFs in your stocks and shares portfolio. We spoke about some of the top signals that you identified there with regard to money supply. Is there anything else you would look out for here to give us, a better indication? We spoke about funding obviously as well, but anything else you'd look out for to give us an indication of approaching the top, or warning signs, or just something for people to monitor, I guess, as we get to uncharted territory in terms of Bitcoin price?
Yeah, I mean, we'll see it in the macro indicators, and they generally have been pretty good. They're always late. Because they're momentum based. They'll have to top, and then it'll have to break a significant trend or momentum filter, and then you'll sort of have a clear indication that this is potentially a top. And if it happens after a sustained run, then it just increases that likelihood. Although at the time everyone will be so bullish and will be laying on extra risk that to convince yourself or to convince others that that's the case will be the challenge. But in terms of like Bitcoin centric type or market centric type indicators, like tried and true, MVRV on Bitcoin is a great indicator. So what I look for on my dashboard for Bitcoin, which I don't know if I want to show this, but like there's really three things that I think are quite effective, which is like Bitcoin network profitability measures. So MVRV, which is the difference between the market cap or the market or the price versus the realized price. So the last value of all the coins moved on chain. So it's like the aggregate cost price, and that just captures it captures the unrealized gain. And when that extends way above the cost price, it's just it's human nature that profit taking will happen. The question is, how much does it need to extend? So if you put it on if you just use a standard like Z-score, you get a measure for that. Another one is NUPL, or the pure multiple, which is just looking at fees relative to where they were. So fees always spike. There's always more activity on chain or an increased activity in a bull market, and then it reaches fever pitch. And so if you can just look at how much they're extended relative to their past, and I have these Z-scores up, and I don't know if you can see that at the moment, Ovi, but for these ones here, we're in so what I'm looking at in this column here is the 4-year percentage rank of the Z-score for these measures. And for these three measures, we are in the 60-second percentile for MVRV. So that would tell me that there's, based on sort of the 1 year look back period and beyond that, still a lot of room to go.
Yep.
But we're over 50%. Like we're in the second half, the bull market phase where things will get crazy and this could shoot up very, very quickly. And so once it gets up to sort of 80 or 90%, generally you're on notice. And so the question is, how do you play it? Do you, if you are looking to take some chips off for this cycle, then do you just start layering out, or do you let momentum roll over and then use that as your signal? And that's really, that's a personal thing. So all of these things at the moment, whilst they are above 50%, above 60%, they're not yet at levels that would indicate we're even close to anything close to a market top.
So did this stuff get to 80, 90% in 21? And then was that sort of timed with that top, basically? So did it, I don't know, I guess October, November time maybe, or maybe even before that?
Yeah. It actually got there with the May top.
Right.
Which was, we call it the China ban, but it was really just overextension. The China ban was just the catalyst that cascaded the profit taking. It did. If I haven't got the chart here just on hand, but if you look at the MVRV overlaid with the price, is still one of the best indicators. The pure multiple is again exactly the same. It just picks the tops and picks the bottoms so well. And so you combine them together, you've got a pretty good gauge. You can overlay just a weekly RSI. Weekly RSI above 75 from memory is usually toppy.
Yeah.
Yeah.
How I guess the RSI will measure that momentum, but how fast can these scores typically move? Is it typically a slow grind up and we sort of see 60% now, and then we head towards 70% in a few weeks, or in a week can you go from 60 to 90? I guess again, I'm sure that the RSI would kind of forecast that anyway, but
yeah, it's a good question. So it I don't have a great answer. I can't quantify, but for instinctively I would say it goes pretty fast. Once you start getting into the banana zone, as it's called, it can move pretty fast. I mean, where are we relative to the last cycle? We're in Q4. There's been an election. It was 2020 last cycle, Q4, that Bitcoin had broken the high, and through Christmas it just ripped. And it probably, I'll get these numbers wrong, but from memory, it was 30,000 by Christmas.
Yeah,
so it done 50% on the all-time high at that time. Have we done 50% on the? No, we've done 25%.
Yeah.
So for maybe it's 110. I don't know, something around then. And then within 5 months it had basically peaked. After that it was May.
Yeah.
So it can be, it's usually fast.
Well, I'm definitely, it's not something I've looked at before personally. I'm definitely going to start tracking it now and full on panic if I see it go to 80 or 90%. No, I won't do that. All right, cool. That's a good one to look at. I'm definitely keen to start tracking these numbers a lot more, because it's not something that I've typically looked at. Tend to focus more on the macro setup, and we obviously had inflation data this week as well, which came in line with expectations, but higher than last month at 2.6% for the US. But general macro indicators are starting to, I don't want to say they're turning, but it's not quite the kind of Goldilocks environment that it feels like, is it really? 10 years back at 4.4%. Equities have been strong, but they kind of seems to have stalled out here a little bit. Do you think there's any cause for concern there? Is it just a bit of a pause, or election now priced in and happened? Is it sort of a sell the news type thing? Or the thing I'm curious about really is rates as well. I kind of would have expected 10-year to be sub 4% with what the FOMC has been saying and with inflation trending the way it has. But I guess maybe the last meeting was a bit less dovish than people were hoping for. But
I would I don't like seeing the DXY at 106 unless we're about to pivot, and then it's going to be perfect for crypto because crypto's rallied as the dollar rallied, and it's back above. Sorry, it's back at is it like a 1.5 year sort of resistance level? I don't know if I've got the DXY on hand, but yeah, I think I do actually. I don't know if you can show that.
Oh yeah,
but yeah. So I mean, this is a level which it's usually peeled back from, and it's typically not been around this time when it's usually risk assets are sort of starting to price it in and sell off a little bit. Now it could just be the perfect area to go long crypto because we're going to see a pivot. I don't think the central planners are comfortable with the dollar this strong right now, and yields is where they are. But I don't know. It's above my pay grade a little bit. I don't know what the transition looks like between, there's animosity between the Fed and Trump and the administration. So maybe they let shit burn for a couple of months. I really don't know. But to answer the question, really, it's I flagged it on Twitter because the macro liquidity dashboard that I use does a pretty good job of just pointing out when risks started rising, and you had global M2s rolled over, DXY is strong, global central banks balance sheets are only moving higher because of the PBOC. So it's just pulling them all up. So hopefully soon the Fed peels back on QT, and that will be perceived very well, and that should help the situation at the moment. We'll have to wait and see, though.
Yeah, it's really at this point of inflection, isn't it? Really, I hadn't even realized that we were at these levels. Basically, a 2-year resistance point.
It's really fast too. It's a big straight move up.
Yeah, in what, 2 months? I mean, you had that big move in October, I guess, and then just the last 2 weeks, it's just completely spiked, hasn't it?
Yeah. So the market is begging for liquidity.
Yeah. Well, it's going to be interesting to see what happens. I think it's funny because people say, elections are times of uncertainty, and once we get the result, things are certain again. But I'm not really feeling that certain about stuff on a macro level. It just feels like we're still at a very inflectious point. Maybe FOMC.
I don't think it changes too much though. They're definitely going to add liquidity.
Yeah.
I'm surprised that we're seeing the DXY at almost 107 now. So I think it brings it forward. If they thought it, they could just pace it out, I think. So it could get a little bit rocky from here if we see a break higher. But what I'm saying is it really doesn't change my thesis of what's happening on the medium to long term.
Yeah,
they'll need to do something.
Yeah, fair enough. Something I wanted to chat to you about actually is Bitcoin dominance. So this rally, whether you like it or not, has really been Bitcoin led. I think Bitcoin dominance hit a high of 61.3% or something like that earlier this week. That's the highest level we've seen since December 2020, back when it was around 70%, I think, right before it dropped and we had that great big alt season. A lot of this has been driven by ETFs, obviously. I think all the chatter about there being a strategic Bitcoin reserve legislation is obviously fueling that even further. What's your take on this? Because, alts have had a terrible performance this year. I mean, many alts are down on the year. ETH BTC is at the lowest point it's been in a couple of 2 or 3 years or something like that. And we get kind of at this point now where there's a school of thought where we've seen the first part of the rally, which has been Bitcoin led, and now perhaps see the second part of the rally when alts regain some market share. But is this time different just because of the ETF and the ETF phenomena, and also the potential for the US to go out there and buy 1 million Bitcoin over the next 5 years, and then every single other sovereign state probably having to FOMO in after that as well?
Yeah, I think it's all those things. So I had a view that Bitcoin would break. It would probably run to 100,000, and that would be the trigger for an alt season. But I also made the point in the research, especially in the last couple of reports where I was doing projections, because in order to project the total market cap after you've projected Bitcoin, you have to assume what you think Bitcoin dominance will be. Like it's like just backing out Bitcoin first and then saying, okay, if Bitcoin dominance is this, then the rest of the market would be roughly worth, X, Y, Z. And I use a top 200 index, so it's a little bit different to what everyone looks at on TradingView. But the sort of point is the same: is that Bitcoin dominance should fall, starts falling relatively soon, but I don't think it's going to fall back to the levels that it has in previous cycles. And that's just because of the things that you mentioned. Like we have now sort of teleported to the next layer of the financial economy, which is the very top. It's the crescendo. It's the sovereigns, the nation states. And so they're now, I've said that they've been buying since last year. I wrote a report in 2023 saying the nation states were already accumulating Bitcoin. And it wasn't wild speculation. You can just look at nations who are mining Bitcoin, who have sovereign wealth funds. And whilst they're not saying anything publicly, just from a sort of common sense approach, they have some of those virgin Bitcoin that they're mined on their own balance sheet in their sovereign wealth fund or one of the entities that they usually run. But there's also probably other nation states that have also been acquiring. And now you've got not 5 countries, but I think 11 countries who have got state-sponsored mining operations. Like this is a global industry now, the mining industry that is, which is like so exciting because it just blows out the arguments that we've heard for the last decade about Bitcoin's carbon footprint and how it's terrible for the economy. It's going to boil the oceans and all that jazz. So now you've got a whole new type of buyer in the marketplace. So I just think that Bitcoin dominance is probably, at least on my measures, it's around like 64% at the moment, 65%. On TradingView, it's like, as you said, I was thinking 60, 61. In my model, I think it probably drops to around like 53, 55%, if I remember correctly what I said in the last report. But in previous cycles, it dropped to 40.
Yeah.
So that's where I'm sort of arriving at, pretty middle of the road.
Yeah, I mean, like Bitcoin dominance was, what was it at the beginning of this year? It probably was around 50% at the beginning of this year, right? I think.
Yeah. Well, it was around there. It's just, it's just stair stop.
Yeah, which is pretty insane. It's funny. I'm curious to hear your take on this. So this year you've had Bitcoin rip and altcoins have drastically underperformed, but you have had meme coins go a lot higher, and that's still a very small part of the market in terms of market cap. Like I think, I don't know what the total meme coin market cap index is, but probably only, I don't know, probably under only a few hundred billion, right? So that part of the market has massively outperformed and altcoins haven't. What's your kind of like view on what's caused that phenomenon? And in a world where Bitcoin dominance does drop below 60% again, closer towards 50, does that come as a result of Bitcoin stabilizing here and altcoins rallying, or does it come as a result of just Bitcoin selling off and everything else doesn't move much lower because of how much it's already underperformed?
No, it's Bitcoin rallying, but everything rallying faster, because if Bitcoin's falling, everything will fall faster. So Bitcoin dominance will either stay the same or continue to rise in a falling market generally. There's usually just a little bit of a lag. Like we've seen it in the last 2 cycles that alts will just kick on for a little bit longer. So there's a bit of a tail there. But what I should have said earlier is one of the reasons why that Bitcoin dominance is as high as it is and has continued to climb is just because of Ethereum. Because there's really only 2 assets in this asset class.
Yeah.
And Ethereum's what now, like 25%, used to be a lot more. of the Bitcoin market cap or thereabouts. But like Ethereum's underperformance or lack of participation really in this rally is the main reason that it's Bitcoin dominance is where it is. You've seen some really good performance from a select few, what I call high quality alts like Solana and some of these other L1s that done okay. But yeah, so in order for Bitcoin dominance to fall, you're going to have to see the smart contract platform more broadly really start to participate. Meme coins can they're already showing that they can do their own, in a Bitcoin dominance or a rising Bitcoin dominance market, meme coins are outperforming. So they're kind of like their own pocket. There's a cultural aspect to it. There's definitely ways to trade that I haven't mastered or even had the time to really look at. But it's sort of like somewhat independent at this point. But in order for really meaningful changes to Bitcoin dominance to take place, so like you have to start seeing the smart contract platforms, namely Ethereum has to get its act together and start rallying. I think it's going to do it. I think Ethereum is setting up for a pretty good 9 to 12 months here.
Yeah. It's funny because I think, at least the way I think, and I think lots of people think this way, is when you're in a bull market and everything's going up and Bitcoin is going up, the human mind gets greedy and it's like, okay, I'm now benchmarking myself to Bitcoin. How do I outperform Bitcoin within this crypto sphere? And I think last cycle it was from buying ETH. And if you wanted to outperform ETH, maybe you got into NFTs and stuff. And this cycle, it's felt like it's been Solana. And if you want to outperform Solana, it's like, cool, I'm going to buy meme coins. But it feels like once that's sort of been an established thought process within the context of the cycle, it just lasts for the whole cycle. And it's very difficult to pull that capital away. And like at least the way that I think now is when I get more bullish on the market, I think, okay, cool, I'm going to buy a few meme coins because I know that's going to act as like this levered Bitcoin type thing. And when I get more bearish, that's cool, I'll sell my meme coin positions and go back into Bitcoin. And that's kind of like how I've been operating. And I think how many people operate. So yeah, there's definitely like a cultural aspect to it, of course. And, people find themselves in meme coin communities and maybe have an emotional attachment to it like they did with NFTs and all that. But I think the capital that really moves it is this feeling in your head where it's like, oh my God, Trump won. Which meme coins do I buy now just so I can like make the highest possible return I can get from chasing an asset, otherwise known as hyper gambling. But we like to tell ourselves it's not that.
We're also snobs in this space as well. It's like, every tier of degenerate. Like I don't really delve into meme coins, but if you go talk to a TradFi guy, I'm a degenerate because I own Bitcoin and some alts, and then it just goes down and keeps going down and down and down.
I mean, even within the world of meme coins, you get levels of degeneracy all the way down to people who are buying 2K market cap stuff, and there is just like no end to how deep.
So there's a bit of snobbery even in the meme coin community.
Absolutely. Yeah. Well, it's funny because you'll see people say things like, "Oh, I will only own blue chip meme coins," and you kind of take a step back and just think to yourself, like, what world are we living in when people are feeling like they're in a safe haven asset within the world of meme coins? It really is like you find yourself in a bubble that you sort of blow around yourself, I think, sometimes without even realizing.
Somewhat detached.
Yeah, exactly. But I'd like to, I guess we sort of like started talking about this already now, but talk about some of the sectoral performances and themes that we've seen so far. I know you have a good dashboard to look at some of this data. Obviously we'll see the data and see that meme coins have outperformed, but curious to look at some of this other stuff now, because my view personally is I haven't really touched altcoins for most of this year. And I think I have a tendency to take the other side of things, maybe when they get faded too much or people lose hope. And it does feel like in that part of crypto, people have sort of lost hope. It's like people have lost hope on ETH, people have lost hope on L2s, people have lost hope on gaming, for example. Like lots of these coins are down on the year. Many of them are still down 80 or 90% from their highs. And I'm just sitting here thinking, in a world where Gary Gensler, I believe, is officially stepping down as of today, in a world where Trump is president, and we see a I don't want to say deregulation of crypto, but maybe more specific and helpful regulation of crypto. Is there a world where some of these altcoins can bounce back? And if so, which sectors should we be looking at? And is there anything in the data to show us signs of maybe early signs of that performance, perhaps in the last week or 2 weeks since Trump's election? I'm kind of curious to hear your thoughts on that.
So I have a thesis that actually we'll see outperformance in DeFi and in the infrastructure sectors. So maybe we can show the dashboard here, so it's just easier for people to sort of see. So this dashboard is we're working on trying to get this over a lot of this data into the Real Vision platform. Awesome. But there's the Bitformance sector indices, and you can see here on screen that I've got them on an equal weight basis and a market cap basis. Equal weight just means that you get a much better insight into like the distribution or like what the participation is like within each of these sectors. So over the last 30 days, digital currency, which includes Bitcoin and also meme coins, has just crushed it. So like we were just talking about Bitcoin dominance. Bitcoin dominance has only gone up. So I have a fundamental thesis that actually DeFi infrastructure will outperform, but I'm not seeing it in the charts yet. So, I mean, DeFi is really interesting for the things you just mentioned about where we're potentially going with regulations now that we have I call them accelerationists. You know, the other side was the reluctant adopters. One was just going to push us into this space faster, and the other one would have kicked and screamed, but eventually, long term, like we would have got to the same place. And the DeFi sector especially is, I think, really interesting. I'll tell you why, and I'm hopefully going to have a report out in the next couple of days on this. But DeFi is interesting. Obviously, you've got much more conducive regulators, or will have more conducive regulators to the space. If you look at like all the different sectors and use cases within crypto, there's lots of different use cases, but the one that has got the strongest product market fit undoubtedly is DeFi. So you can throw stablecoins in there. Obviously, that sort of leads everything. But like borrow lend, decentralized exchanges, whether it's for spot or whether it's for perps, are absolutely crushing it. Like if you look at volumes of decentralized exchanges versus centralized exchanges, they've actually been increasing for a while now. So the market share is increasing, which is a very constructive sign that people want to trade inside the ecosystem on chain applications, and they're getting better and better. Like you look at what Solana's doing in DEX volumes now, sort of overtaking Ethereum, and then you've got like Sui and Aptos and these other chains that arguably have like the most robust programming language for complex DeFi activities. It looks really, really strong. And then you throw in the fact that TradFi are going to tokenize everything, and you're already starting to see BlackRock products collateralize DeFi protocols. Then the big one will be like, okay, when will some of these TradFi companies spin up an L2 or create a soft fork of an existing DeFi protocol, or have a guarded KYC version of an Aave or something like that? And the space will absolutely explode. Like the volumes will just increase over time. So I'm really bullish on the space. And the other thing too is like just on valuations, like there is a way to value cryptos. You can argue, like people argue about it all the time, but like they are cash flow generating businesses essentially, just open source and decentralized or open. Probably open's a better word than saying decentralized. And so if you look at the valuation of the assets versus their cash flows or versus their fees for DeFi protocols versus just L1s, like they're trading on like an 80% discount. So I think what we'll see is traditional investors, growthy investors, the ARK investors that own Tesla, that probably own Coinbase. If the regulation starts to clear up, and we'll see stablecoin regulation next year, the FIT21 bill was a really strong step forward for saying, hey, you're a decentralized application, therefore you have to do this minimum requirements. Hey, you're too centralized, so you're going to have to do some reporting around this. And all this crap that we've seen over the last couple of years with token launches, with so much insider stock being held or tokens being held and not enough public participation, all that sort of hopefully gets sorted out. And then, traditional equity or growth investors come in and they start buying DeFi protocols because it's just a technology. At the end of the day, they have exposure to software companies. And if the regulations are clear, they're going to start buying Aave, Jupiter, Jito, and all these other things. So it's a really interesting case. But the problem here is, Obi, is that we saw a big spike last week, and then we saw DeFi dominance. So just DeFi divided by total market cap collapse because of Bitcoin going up. So it's like, yeah, there's a case there, and you can try and be early. And like, I know hedge funds that are probably buying this stuff, and I think they'll be rewarded. But like, I just try to find when the technicals turn and the story makes sense. And so that's the other. And the other one is infrastructure, which is really just the AI stuff, which is hard for me to get my head around. But I understand that that's going to go up a lot in this cycle, I'm sure.
It feels like to me, and especially with DeFi, because you've been through so many different stuff with like Uniswap getting Wells notices and all that kind of like regulatory noise starting. I think even probably starting towards the end of 2021, I think we started to see some of those headlines surface. But it feels like to me, you're just in this market where like Bitcoin keeps surging higher, meme coins keep surging higher. Maybe AI coins are slightly participating in that, and then you just the mental trauma of waking up every day to see your DeFi coins unchanged when Bitcoin's up 10%, or lower more than Bitcoin when it's down, is a real tough one. And I think everything fundamentally the entire thesis makes sense on paper. And if they start turning on fee switches as well, and they have the ability to do that, I think that becomes very interesting for token holders, and definitely that makes it an asset which I think is very attractive to TradFi, who are also like much more focused on yield than I think the retail market is. On paper, it all looks really good, and look at how much this stuff is down from their highs and all that kind of stuff, and their FTVs that like they're pretty low. But I think the challenge that everyone is finding, including myself, is like, how can you allocate capital to something that just isn't moving? And is it rather than taking that risk now? And I think some people who take this risk now and have conviction will actually be really well rewarded for it for when it does move. I think they're going to make a lot of money. But does it make sense to put chips in there now and just kind of wait in pain, or as soon as you start to see it break out, start moving, then kind of jump on board there, knowing the narrative is strong and it probably has a lot higher to go? It's like it's a tough decision, isn't it? On this,
Yeah.
I think I'm definitely wrestling with.
Yeah, it is, because I mean the FOMO and the emotion of this market is like next level. So if your assets aren't moving and everything else is moving, it's like pretty uncomfortable. For me personally, like I always try to marry the technicals with the fundamentals, but I think you're right. Like some of these coins, so hopefully this will be in the next report, like just looking at some of these protocols and which ones look the most attractive on a valuation basis, but also have the right growth exposure. So a lot of the stuff a lot of these protocols that are on Solana have higher growth profiles. So that's interesting. I haven't really looked at the comparisons with like ETH protocols in terms of valuations, but I think if you're to buy them now, like everyone, even this conversation has been focused around when's the top. Like we should, I mean, for me personally, like, my position, and I've taken me a long time to become this sort of person, but it was actually like, no, I believe in like the 10-year future for this asset class. And I need exposure through the cycles, and I may very well take profits when and where it's necessary. But like, if you can afford to look through the cycles, I think some of the DeFi assets will be good assets. And you got to remember, they got crushed in 2022 because you had the most vicious SEC, right? Even though they were battle tested through the Luna collapse and everything that happened with FTX and came through as shining colors, which should have been the signal, they still underperformed. I would like to think that new regulators, legislation, that when we get the next bear market, they may not underperform as much. But just on like a rational valuation perspective, they are actually mispriced relative to L1s, and L1s are in a death match to lower transaction fees, lower transaction fees. And so, we're seeing it with ETH underperform this year because they slashed fees, which is great for them, but it's knocked around like the valuation and the investment case for ETH. And so there's so much block space that's just going to zero over time, more or less. So there's going to be a flippening happening with or an improvement in apps versus the L1s, but yeah, the technicals aren't saying it at the moment. I guess is the most important thing, but long term, I think it'll be a good move.
Yeah, I'm curious to also, if you scroll down a little bit on this chart, I was looking at some of the numbers earlier, and where was it? There was a section on ETH betas that I was looking at, which was
yeah. Okay, so these are like custom. These are the subsectors, so you can see you can see memes here. I mean, versus all the different subsectors, like absolutely crushing it.
Yeah.
This is the. Can you see this, Obi?
Yep, I can see them. Yeah.
Yeah, these are like just themes, so they aren't indexed, so I can't like look at the look at them on a chart or anything. But I can just sort of they're just averages of a couple of baskets. Yeah, so you can see here memes, and yeah, you've got ETH beta and gaming and other things.
Yeah, this was I mean, that memes number is obviously crazy. I don't even know how we can like interpret that, but yeah, it's interesting to see like ETH up 33% year to date, but ETH beta is down 22% year to date still. Like that's that to me is an interesting one, and I just wonder if that's because like there's about 1 billion different L2s out now, and liquidity and attention are split across all of them, or
that's it. And also like to your point, like there's so much block space on ETH and those L2s, but also, what was the point of owning a token when you didn't receive any of the fees? Like, maybe that gets sorted out with so the L2s will rally with the DeFi tokens to some degree because they also now are able to return cash if they want to. But yeah, it's been a pretty stark underperformance.
And gaming's the other interesting one as well. I think you speak to people who are experts on crypto gaming, and there's this great theory that we should be max bullish on gaming and crypto just because of this idea of having in-game currencies that are interoperable and that making sense and being able, allowing for games to have real, true economies. But that's another one where just like you had a great period in 2021 where a lot of these gaming coins were at like multiple billions of dollars. I think Axie Infinity must have hit like $70 or $80 billion market cap, or maybe probably even more than that. I can't remember what the exact number is, but it was a crazy number. And we had signs of it in 2021, but it just fizzled out with the rest of them, despite there being supposed advancements in that space as well. So that's another one I'm kind of like. It's another one I've got my eye on. I don't think that's one that's been affected really by regulation much, but maybe that's more just of like a function of heavy VC investment and tokens being unlocked and, them getting out at multiples and just causing sell pressure on tokens. But it's another notable like underperformer this year versus the price action we saw in 2021, which was like really parabolic across, many different coins, I think.
Yeah, it was Axie and Sand. That were the big ones. Yeah. I've done very little work on that space. The thesis makes sense to me as well. Like it's been a perennial disappointment. You've had that game released on AVAX. Oh, sorry, on Avalanche. Off the grid, which apparently is doing pretty strong numbers. But the problem with that one is that I'm not sure that there's actually much of a flow back to the AVAX token itself, value accrual from that. So that was kind of like the hope that would kick off the gaming season this cycle. I've got to check back in with it, but it's been out for a while, or it's at least been in beta, and it hasn't really done much to the AVAX price. So yeah, look, I mean, it's got huge potential. I think it's going to happen. It'll be very interesting to see how Sui goes with their hardware release. They're definitely targeting the gaming sector. That's a pretty bold move from such a young network. And it'll be very interesting to see how that performs. But number one, I'm not a gamer, but the industry is huge. Like, you can't discount it for its potential to change things within the crypto and blockchain ecosystem. It hasn't materialized yet.
Yeah, I'm definitely not a gamer, so I found it difficult to really distinguish between the various games and gaming tokens and underlying tech, etc. But yeah, it was just something that I noticed this year has been a dead theme, really, compared to what we saw last year. Maybe that's because last cycle, this whole concept of the metaverse felt new, and we're just coming out of COVID, and people kind of grasped that concept, and maybe 4 years later, everyone realized they didn't want to just stay at home all day and actually go out and stuff. So maybe there's an element of that as well. Look, I think that brings us up to the hour, really. Before we end, we just wanted to showcase some more pro crypto content on Real Vision. In addition to Jamie's work, we had Ash Bennington doing a deep dive interview into 2 different protocols earlier this week. He also did an in-depth look at Ethereum and staking. You can access that on the Real Vision website. That's realvision.com with a pro crypto subscription. But yeah, that's it. That's it for REKT Vision. Jamie, thanks very much for coming on for your debut. I think hopefully we can do some more of these in the future, maybe once every few weeks or something, because it's good to. I think Mando and I were so busy that we just don't look at that much data. It's very much like trading by feeling. So it's good to actually just take a step back and look through some of these numbers. And I think definitely there's a few things that I'm going to be tracking much more on a daily and weekly basis. So appreciate you coming on.
Hey, yeah, thanks for having me, man. Really appreciate it.
Yeah, all right, no worries. And make sure you guys are following us on X, OSF_REKT, Jamie1Coutts. We'll be back next week. Next week, we'll have the drinks with OSF and Mando. That's our monthly AMA for Real Vision crypto subscribers. If you're not a subscriber yet, you can sign up at realvision.com/crypto. It will be the usual time next week, 11:30 a.m. Eastern Time or 4:30 p.m. GMT on Friday. I hope everyone has a great weekend and have a good one.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.